Hey, it's Dan Moralez, and this is Homebuyer Radio, episode number 25. We started to do a series talking about divorce and mortgages. Going to take a little bit of a sidetrack here and going to talk about student loans and want to talk about, in particular, a recent change that Fannie Mae just made in regards to how you qualify for a mortgage if you have a student loan, okay? Unfortunately, when you go to college, more and more often, we have clients who are graduating with student loans, but they're graduating with some pretty significant student loan debt, and that can have an impact in your ability to be able to get a mortgage. So if you're one of those people who are looking to buy a house and you have some significant student loan debt, there's a couple of recent changes that may actually benefit you, okay? The very first change is one that has to do with if you have a student loan that is being repaid by somebody else, even though it's in your name, okay? It's not uncommon to have folks who have a student loan that's in their name, but their mom and dad are the ones that are making the monthly payment on the student loan, even though mom and dad are not on that particular student loan, okay? Now, in most cases, you would normally have to have that payment be counted against you when you qualify for a mortgage. Now, it should be noted that this does not apply to every particular loan type, but only applies to loans that are a conventional mortgage where they're going to ultimately be sold to Fannie Mae, okay? Fannie Mae is probably the biggest buyer of conventional mortgages in the country, so there's a good chance that, if you're looking at a conventional mortgage, this may be applicable to you, okay? So what happens is if you have proof that mom and dad have been making the payments on that loan for the last 12 months, then even if mom and dad are not obligated on that loan and you're the only person that's obligated on the loan, you may be able to not have to count that that student loan payment against you when you qualify for a mortgage. That's pretty significant because I run into that a lot where I have, if you will, students, or those who just recently graduated and they have student loan debt that mom and dad are paying for them and they're making the monthly payment, but I have to count that debt against them when I qualify them for a mortgage. So in this case, the nice part is Fannie Mae recognizes that that's something that happens pretty consistently. So in that case, as long as you can show mom and dad have been making the payments, you got to be able to document they've been able to make the payments or have been making the payments for the last 12 months. But as long as you can show that, you don't have to count that student loan debt in your overall debt ratio when you qualify. That's a pretty significant thing because it's going to make it a lot easier for you to qualify for that mortgage, okay? The other thing where there was a pretty significant change, and it has to do with those clients who would have what's known as an income-based repayment program, okay? What an income-based repayment program is it is a program where your student loan or the required student loan payment you're making is one that is reduced compared to what it really would have been had you not been on that income-based repayment program, okay? What it does is it goes through and basically gives you, if you will, I don't want to say discounted, but a smaller monthly payment in regards to your student loan. Now, usually what happens is when somebody qualifies for this income-based repayment program, it has to do with the amount of income that you're making and the amount of student loan debt that you actually have, okay? So what usually happens, or the usual result of an income-based repayment program, is that the required monthly payment that you are paying is significantly lower than what you would normally pay under your traditional or regular student loan terms. Now, you can qualify using that income-based repayment program monthly payment provided that that lower monthly payment is actually reflected on your credit report, okay? So as long as your student loan servicer is reporting that payment on your credit report, you can qualify using that lower monthly payment. What happens a lot is, a lot of lenders before would not take into account that lower monthly payment. They would qualify you using a higher monthly payment as opposed to the lower income-based repayment program, okay? So those are two really big changes, especially the first one, right? If mom and dad are making the payments for you, that really opens up your opportunity to be able to qualify for more house and to be eligible for more, okay? The second one is if you're on an income-based repayment program and that's what's being reported, again, that makes it easier for you to qualify as well, too, for a mortgage. Now, if you already own a house and you have equity in that house and you want to be able to maybe roll those student loans into your existing mortgage, there is a new option that's out there where you can actually do a refinance, take some of the equity out of your current house, and pay off some of your student loan debt as part of that. Okay, so that's something that's new too that Fannie Mae added, and they made it where the terms are pretty attractive to do that. There's you get away without having to pay some of the normal cost that you would have to pay if you were to take, let's say, cash or equity out of your house. If you're doing it and you're going to pay off, if you will, student loan debt as part of that, they gave you some additional flexibility there as well too. Okay, so if you're in the market for a mortgage, whether you're looking to buy a house, you're looking to build one, refinance, obviously, part of the reason we do this podcast is we want to have the opportunity to be able to help you with your mortgage, when you get ready to do that. We do lend in the majority of the 50 states, so we're able to help you out, for the most part, pretty much almost anywhere you're at. And if you happen to be in an area where we don't lend, I've got a network of friends throughout the country that we can certainly connect you with a good, qualified, and competent mortgage person to kind of help you get across the finish line. So if you're looking for that mortgage, get in contact with us. Again, my name is Dan Moralez. This is Homebuyer Radio. You can reach me at 616-931-4629. Again, 616-931-4629, or through my website, which is danmoralez.com. That's DANMORALEZ.com, or via email, dan@danmoralez.com. My NMLS number is 709-729, and Northpointe Bank is an equal housing lender.